Good afternoon, traders. This is Christian Fromhertz, Chart Market Trader Group, and this is your end of day market recap for Thursday, October 27th. Theme of the day, of course, mega earnings reports. This is the busiest week for earnings. I think it's over 33% of the S&P reports this week. So we'll go through some of those earnings reports. Of course, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for education purposes only. Please read the full risk disclaimer right there. Please also, if you like the video and these market recaps that I do every day, please give this a like and retweet it on Twitter. I appreciate that type of thing. All right, so where did we finish for the day? Before we get to the heavy hitters, we had the Qs down 1.8%. Again, really odd performance. Finally, IWM, which was up the majority of the day, was up 1%. Kind of gave way in the afternoon, but this outperformance between IWM and the Qs is quite telling. And I talked about this in our midday video today, that this may really be a trade going forward. So here's the relationship. I had a couple questions about this, but yes, whenever we're looking at a relationship chart, right, we've got one in the numerator and we've got one in the denominator. So you could go long. In order to get the outperformance, you have to go long one and short the other. Remember that when you're looking at a relationship chart and one is gaining over the other, it doesn't mean necessarily one is going up and one is going down. They both could be going up. One is just going up faster than the other. They both could be going down as well. One maybe just be going down less fast than the other two. So just keep that in mind. I think people I see a lot of technical analysts put out relationship charts, but in order for you to get that outperformance, you do have to be long one and short the other. Okay, so that's how it works. So if we blow this chart up to 5 years, all right, you can see that we really have like a trend change going on for a while. If you even want to go back 10 years too, just to see this relationship. Again, we have IWM in the numerator. So for the last 10 years, this thing has really underperformed. So now maybe it's small caps time. I would be open to that, given how big, and here's even a further relationship. This is going back from 2007, that the Qs have outperformed IWM. So it might be a nice trade. If you're looking for a trade idea, this is something that I'm entertaining, especially after this last batch of earnings, because again, look at what's in the Qs here, right? It's just so top heavy. The FANG names, Apple is 13% of this, Microsoft is 10, Amazon is 7, Tesla is 3. Well, Google, there's 2 Googles in here, Class C and Class A. So if you add them together, that's a little over 7%, which gets you the weight of what Amazon is in here. So if you believe in trends, I think that it's usually what happens when companies have quarters that are lackluster, like we've already seen from Microsoft and from Google and now from Amazon. Unless they say something on their earnings call, the stock looks down pretty decently. It usually is going to last until they have another guidance or earnings report that says something different. So that's one way that you can kind of exploit if IWM wants to continue to outperform, because you look at this chart in IWM, and again, like I said, it did give way at the end of the day, but it is still above the 50-day moving average, right? All this talk about, and I get it, that the S&P got rejected at the 50-day moving average. That is true. But IWM is still above, and again, it doesn't mean that IWM gets out of its downtrend. It's got work to do here too, to get back in an uptrend. But from a relative outperformance standpoint, long one versus short the other, that's where I would put my money on right now. All right. Again, I change my mind frequently, but for now, that's kind of what I see. So let's talk about a couple of these reports. Again, just they're so large. Where do I think this is going to? Notice that we don't have any VPOCs down here on the 1 hour chart. And I don't think we have anything. Well, we do have one down here at 95 that's going to be taken out. Really, when we go to the weekly chart, and again, the price doesn't update on Thinkorswim, which is a little bit annoying, but right down to 89, which is where it's traded after hours. So that's, going to work pretty decently. You can maybe say that, after the fact that this was a head and shoulders and it broke this 106 neckline, which was S2 on the weekly chart. And, we did a good job playing this. We had a Tribeca Trade Group outing last night, traders outing where we went out for some drinks, and we were talking about, all the FANG names that have reported so far. And, it's nice to kind of get together with traders and talk about different ideas and so forth. But I posed the question to a couple other traders. I said, hey, what's the bull case for Amazon or Apple? And I couldn't really find a bull case for Amazon. We know that they had a second Prime Day that kind of fizzled. And, by the data that came out for Microsoft and what is their platform? Azure, I think it's called, right? They missed on that. Now, of course, I'm sorry if I'm getting the name. I might be getting that name wrong. That they use for their cloud. AWS is what is Amazon's product. But after you hear the other large companies have a pullback in it, you have to think that Amazon probably had the same thing. So this works really well. What we did was I was trading this today. I didn't think that they would wait for the earnings call. So, a couple of us traded this today. I was in the Amazon, not this week's, but next week's November 110 puts. They worked pretty well. And I actually, 475, this was at 12 o'clock today, and I stayed in it. I rolled it down to the 107. And I said I would add to it, which it never really did bounce. And I took some profits. I took one more profit target at 460, and I kept the balance on for the earnings. So this is really nice, to be outright long a put rather than a put spread. I only really do that if I've already made gains on the stock already that day, right? Where I've actually locked in money and I'm just kind of playing with the gains. But if you are trading, I sometimes I hear this on Twitter, and I get frustrated when I hear it, because traders, if you're trading options, you should absolutely know how to delta hedge. If you don't know how to delta hedge, or you don't know what it is in options, then you probably shouldn't be trading options. Just my opinion, because some of these platforms, they should really give you a quiz or a test about what options are and how to hedge them before you're allowed to trade them. Because I say this to people sometimes, and they don't really understand the concept, because they may be newer to trading options. But if you're outright long a put or call and the name moves after hours, you can lock the gains in. Well, how do you do that? Well, you buy or sell stock. So in this case, right, I'm long the put. Right, so I have a short position, synthetic short position with the put, right, which is the 107 put. I went ahead and bought stock, and I actually locked in a good portion of the gains at $90, right? So, that's something. I'm not going to explain this in this video, because I don't want to go make this video an hour long, but basically the delta of your option is, how many shares that you need to hedge the position. Now, because, the risk is that they say something positive on the earnings call. So I've already bought the stock at $90, and now I'm not hedged on the whole position, but I'm hedged on a good portion of the position, where I've already locked in, my strike price. My strike is 107 minus the 90, right? So that's $17, minus the premium that I paid, which is here, which is 360, right? So that's $13-14, right? Plus I'll still have, they don't expire tomorrow, they expire next week. So that's how you lock in your gain, and that's how you delta hedge, right? So, and then what I'll have to do tomorrow is, as I'm selling the put option for the gains, then I'll also sell the stock, right? So again, now the only the problem with that is if Amazon goes much lower than $90, I've already locked in the gains for the $14, right, by doing it this way, which I'm satisfied. Like that's 89 was my price target, so that's perfect. So if it goes up, so be it. If it rebounds, because what could hypothetically happen, and again, I'm not saying it does happen, but if Amazon rallies on the earnings call and goes back to 107, right, then then tomorrow you can't sell your option till tomorrow, so you lose that hypothetical premium. But if you buy the stock in the post market, you're locking in your gain. And and if it was a call and the other way around, then you want to be selling the stock, right, at the highs. So anyway, that's how you lock in your gains, using stock, and when you have an option, when you have an outright options position as puts or calls. We also did, I was more concerned about these names failing, or not doing very well. So I did this 270, 270, 272, 270, 268 put fly, right? That's where you're selling twice as many as the strike, and you're targeting the strike on this. So I think I should be in good shape on this. It's trading right at 269, right? So this actually there was like a mini head and shoulders here. We broke into value, and so we'll see. I'll have to get that full profit on that. It'll have to be around there by expiration. Apple, by the way, so again, that's another. It's a cheap way to take advantage of a move, and if it doesn't work, then I only lose the 21 cents. But this could really work quite nicely for me. You could really get nice profits if the price goes to your middle strike by expiration or close to it. All right, so Apple, you could see, is trading down. Listen, my opinion doesn't matter much, but I didn't think it was a horrible report. Again, we'll see what they say on the earnings call. They missed a couple metrics, but in relation to the other FANG stocks that reported, I thought their numbers were not not horrible. But like I said, that's just my opinion. Again, the market and the why I talked about this Qs and IWM trade, because just the Qs are so heavily weighted towards these big companies. But again, it's not the whole market. I find it really interesting that there are some companies that did pretty well. I mean, this PI, there's a number of strong earnings names. So I think, not to be super optimistic, but there are some companies that did this. Now, the problem is that this is not a big weight in the indices, so it's not going to drive the index performance. ServiceNow had really good numbers, even though they're still in a downtrend, even though up 13% today. So there are going to be some trading opportunities. There are names that really crushed it. This RJF is interesting. You look at some of these names, these niche financial names, right? We talked about Goldman Sachs last week, which has done very well after the earnings report, right? They have some resistance up here. JP Morgan kind of started this, and look at JP Morgan go. Up to the 200-day moving average, and a really nice performance. So, make sure that you're looking. I don't want to be mean in these videos, but I've talked about how just FANG stocks are not where it's at. They've lost leadership a long time ago, but there's many other opportunities. The positive is that there's many other opportunities in companies that are in a different environment. SF is another one. Stiefel had good numbers too. I think LPLA, which has been my favorite in the group, I think they had decent numbers. I don't think they crushed it. I was kind of interested to see what this one would do. But again, it's another pocket of strength. We've seen this. Orly is another name too that another example of a group that's doing. You would look at the stock and you'd be like, oh geez, we must be in a big bull market. When you look at these auto companies, right? Look at GPC today, up 2%, not caring about anything. So anyway, as we wind down we're not winding down earnings season yet, but once we get towards the ends of earnings season, there's going to be things like this, that have have crushed it. Look at the CALX as well, right? So we've put together an earnings list, and a lot of times you will find some really good opportunities in names that did very well in earnings, because the institutions have to start to buy them. I think at this point everybody knows the AEHR, which I think needs to digest a little bit. It actually did today. I wasn't paying attention to this name today, but I'm actually looking for it to come down to the 20, or at least the 20-day moving average to come up here. But this was this was down 6% today. Let's shake the some longs out here, and then we'll go from there. So guys, that's the end of the video for today. I wouldn't get really discouraged yet, because all these FANG stocks reported bad numbers. The problem is that they are a big weight in the indices and a huge weight in the Qs, but there may just be other opportunities out there. One of the things that we're going to want to see, right now we're in, and I think I have this still in here from this morning, but we are in a bullish crossover with the McClellan Summation Index. So we have been seeing breadth expand. And again, that means that it's all companies. It's not just the 5 stocks that CNBC likes to talk about, right? So there's a lot more opportunities while we're in a bull crossover. But I think that we have to get through this. And then of course, tomorrow, we kind of have an important report for tomorrow. That's the PCE deflator, another gauge of inflation. They're expecting 0.3 versus 6.3. That's what is expected for tomorrow. So we'll see if inflation comes in at all. Looking at, this was interesting because Charlie Gasparino from Fox tweeted out that BlackRock is talking about what the Fed might do. And it's funny because they said exactly what Fed fund futures are implying. We're going to have 75 basis points next week. Right now, Fed fund futures are pricing in another 50 basis points come the December 14th meeting. I'm looking right here, right? And then another 25. Now, this is subject to, this could change if inflation is still hot, right? This might push this out further. But right now, that's what Fed fund futures are implying. So BlackRock said this to somebody today, their clients or something, but that's exactly what Fed fund futures are implying, right? 75, and then it should start to dwindle, provided that inflation starts to come in. And of course, we'll hear from Mr. Powell next week. All right, guys, have a great night. Again, if you're not a member of Tribeca Trade Group, check us out, www.tribecatradegroup.com, and sign up for membership. Thanks, guys. Have a great night. See you tomorrow.